We'll be recording the session. So recording has started now. So welcome to this Customs Health Audit pain-free testing session this morning, when we hope to help you to understand how you can make sure that you are compliant with the HMRC customs rules, and also to think about anything you might need to do retrospectively to ensure that you are compliant on the entries, both for import and export, that you may have made in the past. So moving on a slide, I think we'll get started. We've introduced ourselves. I should say that there will be plenty of opportunity for questions later, and I'd ask you to use the Q&A function to record your question, and we'll come to as many of those questions as we can once we complete the slide presentation and take you through some of the issues that you should be maybe thinking about. So just to talk a little bit then about ChamberCustoms. ChamberCustoms is we think we're experts in the complex nature of international import and export. We think that because we do rather a lot of it on behalf of both our clients who are trusting us with their import and export clearances, but also in the consultancy services that we deliver through to businesses across the UK, and also the training that we deliver for customs agents in freight forwarders, haulage businesses, and trading firms, as well as our own teams across the UK British Chamber network. And those people are sitting in chambers across the country doing fabulous work for businesses in their area, and helping not only with the customs declarations, but also certificates of origin, ATA carnets, and many other areas of guidance and advice that helps thousands of businesses to trade across borders. Should also say that we pride ourselves in taking a very compliance-led approach to the work that we do, and ensuring that our customers are able to follow the rules, understand what they are, but also we use technology to ensure that we can speedily process customs declarations and transit documents. So we apply some technology to the work that we do, and our typical customer is not typical. They are very large and they are very small. So we really do offer a service to companies of all sizes and shapes across the UK, and we help them to overcome those challenges that they often face. So what do some of those customers say to us? Well, say, what we hear from our clients, but often, the misconceptions that we are going to cover later on in the slides here is, well, we don't really need any. We didn't do any import entries in 2021 for goods coming from the EU because they weren't required. They say we never needed a license before. Why would we need one now? They think that commodity codes don't ever change, when in fact maybe they do. And they say things like, well, I imported goods from the EU and I trust the people I bought the goods from that I bought the goods from told me they were EU origin, so that's all right, isn't it? And very often a common mistake is to think that the person that's making your entry, the haulier, the freight forwarder, or indeed the customs agent, decides what to put in your entry. So some issues there. Also, very often, very common issue that people come up with or will tell us is that, entries are not my problem. I sell X works. It's nothing to do with me. They'll say things like, well, good luck to HMRC finding errors in 2021. They're never going to check those entries, are they? We don't postpone VAT, we just pay for it. We're too small for a deferment account. Nobody's going to give us a deferment account, or it's too expensive. And they also say much the same thing about consultancy. Getting consultants in sounds really expensive. We can't afford it. Well, maybe today, I hope that we, for those of you who can do this for yourself, that's fabulous. But anyone that needs specialist knowledge, we hope that you'll see that actually you can't afford not to. Perhaps think about taking some advice from somebody who actually understands how this stuff works. So I'm going to hand over to one of our experts and our lead consultant, Emmanuel, who's going to take you through some slides on that will cover some of the areas I've just talked about, and also provide some guidance on what you should be thinking about and where you should be looking to ensure that you have compliance with the HMRC entries that you've made and your customs operations in the future. Emmanuel.
Thanks, Liam. It's interesting, to read those comments, because if they don't set alarm bells, I don't know what will. It's some really common things that we hear everywhere. So the approach that we've taken is to quote one of our long friends, is that when we look at import, when we're doing imports into the UK, things get a little bit more serious, because when we import goods, there is a financial consideration for HMRC, and that's their role, is to collect the money that is due for goods to enter legally and compliantly into the country. And so it's all about money when we look at imports, and that makes things potentially scary. So our approach is to actually ask 3 questions, very simple question to a trader that is importing. Could you pay less? Could you pay later? And could you end up paying more? So these are the 3 questions that we actually used as the basis of our journey. And I would like to talk you through in the next few slides, of how you would approach these questions. And I can't repeat, it's like in a compliant way. When we say, can you pay less, is you have to pay, but you have to pay what's right. You don't have to pay more, and you don't have to pay less than what's right. That's the important point. So one of the big questions is, what is it that you are importing? Deciding what you're importing is key. And you will all know that we use in the world a harmonized system to classify goods. And the first part of is internationally agreed, but not the second. The second part depends on the country. So, if HMRC was to come to you and ask questions, one of the first questions they would ask you is, are you using the right method? How do you get to that commodity code? That would be a question for a HMRC audit for you. Who decides that commodity code in your organization? And we saw before a comment saying, oh, well, surely it's the overseas party who decides, right? They're selling the goods, so they're telling me that these are, following that code. I just take that code and use it. But is that correct? Or should you, as the importer, the party who is resident in the UK, who responds to HMRC, should you have a more active role? And in choosing that code, do you have the right skill sets? Do you have the right people in your organization who can make that decision? Because choosing a number, it's not always evident, it's not always clear what that code represents. The tariff can be very clear, and sometimes it can be very confusing. And there is quite a lot that there is there. I mean, we do a lot of work with international experts to share that knowledge of how to get to that code. But the other thing, and this is really a major issue, is that you are required to review the classification of your goods on a regular basis. So if you imagine, like until a few years ago, the concept of a drone was not something that was widespread. And so you wouldn't be surprised to know that it's only in 2022 that we actually have a classification for a drone. Before that, we had to use a different code that was the closest thing that we had. Now, as an importer, you are required to keep up to speed. So our final point there is like, have you updated your classification in light of HS 2022? So in January this year, we had quite a major update to a lot of the chapters in the tariff, with some codes disappearing and some codes being introduced. And it's quite important that you do that. The bottom line is that at import, choosing a commodity code will drive how much duty and how much VAT you pay, because that's how the calculation is done. One of the first parameters is, what are the goods? What code are you using? Choosing the wrong code is not ideal, because that can lead to some problems, but we'll talk about that in a minute.
But it can also lead to you paying too much, can't it? That's the point, is that,
absolutely.
It can be the case that sometimes that we find businesses that are using the wrong code and actually they're paying too much duty, when in fact the goods that they're importing have been zero rated in the revised in the the UK tariff.
Absolutely, Liam, and I have met people who will say, I'd rather err on the side of caution and pay the higher rate of duty just in case, because I don't want any problem. But funnily enough, that's also non-compliant.
Yeah.
So the other thing that is really, it's baffling. I mean, we teach a 4-day course on how to do entries, and we spend a lot of time on this. So I'll try to be gentle and brief. I don't want to scare people off, but to calculate the amount of import duty and VAT, you have to understand your maths. You have to really do some work. You have to understand how you're valuing the goods. Can you use the invoice value or not? What's already included in that invoice value? Because the calculation of duty payable is done on something that is called the value of the landed goods, and there is a lot that influence that. We're talking about the Incoterms that you're using. What's already included in the invoice? There are things that you have to add if they're not included in the invoice already. And there are complex considerations. Do you have some sort of agreement, for example, for distribution in exclusive in a country that you're paying for to your foreign supplier? Do you have a franchise agreement? Do you have to return some money? Do you have like commissions that you pay? Or could it be that you actually paid commission on marketing activity abroad? Some of these things can be deducted from the price that you're declaring, which means that you pay less. And it's legal, it's absolutely fine. Again, one of the things that is done in the industry is that you ignore all of this for fear of doing it wrong, and that means that you pay too much. Likewise, you have the idea of discounts. Now, discounts is a very delicate matter. But some of the discounts that you can get as an importer are actually recognized, allowable, and they can be used. So you can actually reduce the amount that you're paying. So it's really a delicate topic here, and you've got to be careful on how you do it, or your agent does it for you. The interesting thing, as Liam, you referred to this before, is if you have done it wrong in the past, there are ways. It's not all lost. There are ways that we can go back, can we, and help.
Absolutely, and it's always better to reveal where you have erred to HMRC and put it right than it is to wait for them to tell you that you got it wrong. Like anything, admission of wrongdoing is always welcomed, and that shows that you're trying to ensure that you get things right. It's never a bad thing to do that, and we do it regularly for clients, and indicating to HMRC where something hasn't been right, and actually we describe the action that's been taken, and generally speaking, HMRC will welcome that intervention.
Yeah. So continuing on how much you pay, clearly I don't need to tell you that we are no longer in the EU, and actually we are in a different world, in a world where there are there's a range of free trade agreements between the UK and various countries, and they are being updated, and of course there's the DIT is incredibly busy working on all of that. What that means for you is that it's important to review regularly what is available. because depending on where the goods are coming from, where the goods were manufactured, and all the concept of preferential origin, which it's key at import, you could benefit from a zero rate of duty or a reduced rate of duty. But the free trade agreement is not the only thing. There are other ways to actually reduce that tax burden, and that is actually when we look at quotas, temporary measures that are introduced, suspensions, or other arrangements. Now, this would allow you to pay less, but you would want to do it in a compliant way. So when you're claiming a zero rate of duty, as you can imagine, HMRC will be interested at some point in checking that you were entitled to that reduced rate. And so there are things that you need to kind of ensure. Proof of origin is the top topic that we find when we talk to clients. Having the correct statement on an invoice or the correct document that accompanies the good, depending on the current and latest version of the agreement between countries. The cumulation concept, if the goods are not coming from the country of origin, but they've gone through another place, are you still eligible? Have the goods been manufactured and processed in different countries? That's all that could affect your eligibility. And finally, as we saw in the comment before, importer's knowledge, which I don't know what you think, Liam, but for me, that is the most misunderstood and dangerous concept that we've been using since January 2021.
It can be, and when it comes to origin, for firms who are interlinked in some way, maybe under common ownership in different parts of the world, then being able to demonstrate importers' knowledge is relatively easy. Being able to be certain about the supply chain and where goods originated and any processing is very, very easy. But where you buy goods from a third party, put simply, if the invoice declaration of origin says these goods have EU origin, but the goods themselves are stamped made in USA, well, or they're goods that wouldn't commonly come from that country or be grown or made in that country, then it's not good enough just to accept an invoice statement of origin. You must be more sure than that. And of course, being Chambers of Commerce, we would always say, insist that the seller of the goods supplies you with a certificate, a preferential certificate of origin from that country, either from a Chamber of Commerce or from the tax authority. That will carry more weight with our tax authorities. And you're right. I mean, importers' knowledge is simply saying, I believe that those goods have an origin of France or Germany, in and of itself is not enough. You're going to have to be able to stand that up in the event that HMRC come and ask you to. And they're doing more of that now.
Especially, Liam, because what you said there that's the nugget, is when you are claiming importer's knowledge, you are saying to HMRC, come and ask me, I know. You're not saying, here's something that the overseas seller has provided, for which they could be prosecuted if it was false. But once he said, I have knowledge, I, the UK trader, have knowledge, then you, the UK trader, have to prove it. And that is very misunderstood, because that flips the liability. So
it does.
Yes, you could pay less, but can you stand up your claim, as you said, Liam? So it's a very something that we really like to investigate. Now, something else that I wanted to cover in terms of paying less is special procedures. Now, there are ways. I mean, the UK, I mean, the EU code and what's been now enshrined in UK law have a series of options for companies who import goods on a temporary basis. Just to summarize it very quickly, that's what special procedures help you with. Special procedures help you with suspending duty, which means I don't want to pay it now, I'll deal with it later, for some specific cases. So what happens is that you suspend the duty, and then if you decide that those goods need to stay in the UK, you only pay at that point. So to begin with, it gives you time. time to postpone, time to suspend, time to pay later. But also, if the goods do not stay in the UK, well, then there is no duty payable. So actually, it makes us competitive again in an international market where we can import raw materials from abroad, which we do, and then we can process in the UK, and then we can export. And in doing this, if the goods are intended for re-exportation, we are not paying duty in the UK. The government supports the industry in the UK. And this is very relevant at the moment, isn't it, Liam, with what we're seeing with the falling pound and the international scene?
Anything that can gain some margin, whether that's through cash flow, cash is tight, and actually delaying the point at which you pay duty or avoiding the paying of duty in this country, and then paying it again in another country when you re-export to that country. Any of those things have got to be good for traders. And as we know, since we left the single market, businesses have had to adapt, and there are, as you rightly point out, some procedures that people can use to land goods in the UK and then subsequently send them somewhere else under sort of temporary admission. Yeah,
and the other thing to think of is, like, of course, we're talking about import, but what about re-import? That's something as well that people are, I think, they're missing out. So when we are sending goods out to another country to be processed, to be repaired, and we re-import them, then we only need to pay duty on the added value that those goods have acquired whilst abroad. But if we don't do it properly, if we don't export the goods under the correct special procedure, we will pay duty on the entire value of the goods. And that, of course, creates a burden that we don't need. So, it's really important to understand that. And something else that people often miss is the ability that we have using a special procedure called return goods relief, where we can actually accept a return of goods for a very long period after we sold them without paying duty and VAT, because the goods are returning to the original owner in the UK. So there is quite a lot that you can do and quite a lot that you can take advantage of. So that's all about paying less. But, at the end of the day, it might be that you will have to pay. It's quite possible. So what about paying later? So I use like a very known and borrowed this. I haven't invented this, of course. So income is vanity, but cash flow is sanity. So what I mean by that is that there are ways of delaying what you have to pay. Now, I want to talk about the last point that we have on this list, and it's postpone VAT, because Liam, you can tell us more about how we got there, but the ability of getting postponed VAT is, I think, is an amazing advantage, which is free for businesses. So instead of doing what you had to do until a couple of years ago, where you had to pay import VAT the moment the goods crossed the border, you can actually now say, I don't want to pay it now, I want to account for it, and I'll deal with that amount of VAT on my next VAT return, which in most businesses' case is on the next quarterly return. In that time, as a trader, you should have had the time to sell your goods and actually collect the VAT that you need to pay to the government. So rather than you funding the VAT out of pocket, you're actually holding on to the money yourself, which I think is quite good. I mean, cash flow it's got quite a tangible value, doesn't it?
It does, and that was a hard-fought campaign by the British Chambers of Commerce to get that reinstated, actually, because it was that's how we dealt with VAT on imported goods prior to joining the single market. When we joined the single market, the VAT was placed on goods for the rest of the world at the border and couldn't be postponed, and we campaigned at the BCC to bring that back into line with the way that all other VAT is dealt with in the VAT return. So it surprises me the number of firms that are still paying upfront and not taking advantage of, free credit in a sense, to be able to do that. And there's some other free credit I think you're going to come on to.
Absolutely. The other thing to do is for duty, why not defer it? I mean, we have some customers who do not like the idea of deferring, and the two common things that we hear are, as you saw before, like, we're too small, we can't get a deferment account, it's too expensive. Well, actually, there are ways, and again, we lobbied for this. We have a free deferment account guarantee waiver. So most businesses in a good stand with HMRC can get very easily a £10,000 waiver, which means that with some help filling some forms and going through the process, you can get £10,000 of HMRC credit.
And
again,
it's not massively complex to do that. I mean, the guarantee waivers, as Emmanuel says, if you're in good standing, i.e. you don't owe the taxman money beyond what you would typically owe at any given time, you have a good record, then you'll get a £10,000 per month guarantee waiver pretty easily.
Yeah, and the other thing is there are new ways, because of course CDS is introducing changes, and we have to be aware of that, and we have to be careful, because some of the points that we touched on before in terms of adding and removing things from a price, and I can see there are some questions which we'll cover in a bit, they are declared differently on CDS, but CDS also gives us some more flexible ways of paying money, and CDS cash account is another wonderful way of dealing with that. But what I wanted to cover as well in terms of paying later is, could customs warehousing be something useful for you? Customs warehousing is the ability of creating a space on your premises or using somebody else's premises where goods are brought in duty suspension until the time you sell them. Not only you actually delay duty and VAT until such time when you remove them from warehouse, you do not pay if you re-export and you go overseas. And the other thing that happens, which is quite nice, is that the origin status of the goods is maintained. It's a bit like the goods are frozen. And this is like a major advantage of having this special procedure, which is very often missed.
For a lot of firms, the customs warehousing application is the thing that's avoided the need, for example, to set up in an EU country, so that they only discharge from the warehouse those goods that are entering Great Britain. And for those that are going to the single market and indeed Northern Ireland, then they go there as if they've never landed in Great Britain, with all of the origin attached, and therefore the ability to claim tariff-free trade, assuming that the country of export and import have a trade agreement in place. So it's a huge advantage for businesses, and we've seen plenty of examples in the last 12 months or more of businesses that are making significant savings from what they were doing in 2021, where the cost of trade almost seemed to make things impossible for them.
Yeah. But there are things you need to be careful with, because you could end up paying more. And by that, we have to remember the mission statement of HMRC and what their main aim is. And they are the entity in the UK who actually looks after collecting money and collecting tax to then support the activities of the country, and they have in their mission statement that they look after the majority of compliant tax people, and they go down hard on the minority of non-compliant tax payers, and they declare that. But it is their role. The role is actually to check that people pay what's due. Now, they do have the lawful right to investigate and recover unpaid debt. And in doing that, they ascertain whether it was, a misunderstanding, whether there was actually some sort of intention, and whether there was like kind of structured intention. So, you know, that you could end up with nothing to a civil penalty starting at £250, but you could end up with a criminal prosecution, you know, if actually there is intention of fraud and therefore defrauding the government's purse. Now, the typical scenarios that we're going to be dealing with for quite a while is the absence of customs declaration. Just to be clear, I mean, I don't want to be sensationalist, but absence of customs declaration means smuggling. And we have a lot of goods that have entered the country, and I think Liam has more up-to-date stats than I have, but there are goods that have arrived in 2021 that HMRC suspects are here, but have not been declared. There's like no paperwork for all the beautiful things that we heard on our quotes board at the beginning. Goods just were delivered. You know, but what do you mean customs declaration? I always received 10 boxes of widgets from Spain every month, and I keep receiving them in 2021. I didn't know I had to do anything. This is common, absolutely common.
It's shockingly so. And very often, the kind of clue, believe it or not, the reveal sometimes from HMRC is that that your finance team has done the postponed VAT accounting, or accounted for the VAT in their VAT return, but actually there's no matching customs declaration in the system to correspond with that VAT amount. So sometimes one part of the business is revealed what another part of the business has not done, because the goods kept arriving. I thought we had some kind of inter-arrangement here. Ignorance is no defence, folks. So you know, you may have made an entry in your declarant record, but not actually made the supplementary declaration. Again, there's ways that you can recover that. The date that is bypassed really, but it's maybe better to fess up than to hang on. But there's more out there than you'd think.
Yeah, and I mean, you touched on something very delicate, because there was a massive misconception of how goods should have been imported in 2021, and there was the basic misconception is that yes, there was some light touch first part of the declaration, but there was a hard-coded second part that had to be done to complete, and that is what we're seeing is missing. And the problem is that is the second part, that supplementary declaration that you mentioned, Liam, that is what drives the payment, the declaration of duty and VAT payable. And that's how they're going to find out, because as you said, it will not match on that trader's record between the VAT returns and the import stuff. The other thing that we notice, and we have already seen customers with this problem, is the insufficient or the not credible proof of origin. We touched on that. We have seen a lot of third parties declaring or assuming that the importer would be happy taking on board that liability, and they declared importer's knowledge. Why did they do that? Because you don't need any document reference. You can just put a statement on your declaration when you're an agent and say, yeah, I have importer's knowledge, and the declaration goes through on the system. But as we always say, the fact that a declaration is accepted by chief or CDS today doesn't mean that it's compliant. So, and they have the right to reclaim the money, don't they?
They do, and the other thing that people heard, as opposed to what the government said. So what the government said in 2021 was that you didn't require proof of origin at the point of import. What they didn't say was that you never required it at all. But people heard, I don't require proof of origin. And so again, very often in 2021 imports, people don't actually have any even a claim of importer's knowledge if that's what's in there. They don't have the knowledge to back it up, and they don't have the materials to back it up. So again, retrospectively, it's worth reviewing what you do have and deciding what action you might want to take about that.
Yeah. Same thing with ineligible preferential goods. I think we talked about it. You know, if the goods are not coming from the right place, there might be things that make your goods not eligible for preference. That is a very easy area for HMRC to investigate. The other one is incorrect application of customs procedures. You know, we had instances where people have, you know, used inward processing for storage, and that's not allowed. Where the people used return goods relief without having, you know, out of time, or you know, without being able to prove when the goods were exported. You know, that there are things that you do which again seem to be okay at the time of doing the declaration, but can create a problem later. Wrong commodity code, typical. Will you know, it's this is the typical thing. You know, are you dealing with parts, or are you dealing with an assembled object? So if I'm importing you know, a table and it's packed, you know, it's an IKEA wardrobe, that is an IKEA wardrobe. It's not a list of parts. And you know, you could have different tax treatments and different duties to pay on one or the other. So it's something to be really careful of. I remember a case that we dealt with where you know, the importer actually had to take the overseas seller to court because the overseas seller suggested with intention that they might import a list of parts packed separately but in the same container to avoid the anti-dumping duty that was applicable on the assembled product. And they imported it and it worked. And then lo and behold, 6 months later, they got an audit from HMRC and they got fined. And so not only they had to pay the duty, but they were fined as well. So it's this is just to support the concept. As the importer, you have that liability. Even if somebody else is doing the declaration for you, most of this industry works on direct representation, which means that you are liable for what they're declaring on your behalf.
Yeah, as we always say, Emmanuel, HMRC don't go. They don't go foreign. They don't travel to collect, you know, penalties. They chase the goods, and the goods typically are sitting in the UK or have been with a UK company. So it's always the UK company they're going to go for. Yeah,
and you know, calculation of goods value. We said that ineligible discounts being applied, this can create issues.
Yeah. And we got a question that actually might be as well just to come to that at this point, just for clarification and something we talked about earlier. What they are saying is it's an anonymous attendee. Duty is calculated based on the invoice value of the goods. The VAT is calculated based on the landed costs, which is the value of the goods plus duty, plus freight costs, etc. Well, I mean, that broadly that's correct, but there may be some elements that would change that.
Yes, so it's broadly correct, and yes, the invoice. So the duty is calculated on the value of the goods using one of the 6 valuation methods that is allowed by HMRC. And on top of that, we have to put basically anything that is not included on the invoice that affects the international side of the journey. So before it crosses the border, and then we can deduct anything that HMRC allows in what used to be 702 and is now 252. So that's how we get to that value. Once the goods cross the border, we apply duty, and then we pay tax on tax because we take that value plus the duty, plus any cost that is incurred to conclude the sales contract between the parties, that is landside, and on that we apply the applicable rate of VAT. Yeah. So that's, but I think so that is a good enough description. Yeah. The devil is always in the detail, isn't it? It's like there are things that you can take out and things that you need to put in, and on large shipments, these can make a difference. It can make significant difference. It's all the marginal gains that can be made one way or the other. And important, as you said, Emmanuel, it's about paying the right amount. But exactly. Sometimes paying the right amount can turn out to be a bit less than you've paid previously. Yeah. So great. So I think we were just on the last point, the proof of export and lack of evidence, which again we can turn to one of the questions on that as well, I think. I was just thinking that as Nicola Robinson is asking about, you know, what proof can you keep? So this is on CDS. So we got C88 on chief, C88 on chief,
Chief goes, CDS doesn't have a C88, so what have they got then?
What you have is, well, first of all, there is a printout that most software will be able to give you. It's a form that that has been agreed by all the software suppliers in the UK, and it looks like the C88. Some people call it the CDS C88, which is not right. It doesn't exist, but it's a printout. It's a PDF printout, and what it shows you is the MRN. Now, the other thing you can do, Nicola, if you register on the CDS financial portal, and you've made the payment with one of the CDS payment methods, i.e. deferment account or cash account, you can then see the list. And you should, if you use postpone VAT, that will appear on your postpone VAT statement that is also available on the portal.
But that's only going to apply to imports. I think the critical thing that that Nicola's asking, and many people ask us, of course, is on export, where you have to prove the goods left. This is where the X works. I sold them at the factory gate, but how do you know they left the country? Question comes in. And actually, as you say, most softwares will allow you print, but that print needs to include these. You see the MRN to prove that the goods actually crossed the border and left the country.
And it's really interesting because HMRC is using CDS, which is an electronic system. CDS shows you an MRN, but we don't yet have a government portal where we can actually query, we can input that MRN and check. We can do it with transit and other things that are on the European database, but we haven't developed our portal yet. I think that's on the cards. Meanwhile, keep proof of export, all the commercial documentation, proof of transport, signed CMR, etc. Keep a copy of that printout, and at least as a minimum, keep a record of that MRN, because even if we can't query it in the public, HMRC can, and they can check that those goods were exported.
Indeed, absolutely. Thank you.
Cool. Okay, so I think there is, we can move on to how can we help, Liam, and then we can do some more questions if you like.
Yeah, absolutely. We can do that. So how can we help? We can help in a number of ways. And actually, if we go to the Health Check Complete and Health Check Lite, these are ways that we currently help. So we do offer advisory consultancy services to businesses, and we are developing an online questionnaire and automated scoring and report, which will come to you very soon. If you're on this webinar, then we will drop you a line, drop a note to you, offering you the chance to be part of our beta testing on that. And that's going to be live in the next couple of weeks online. But what we can offer you right now is a 30-minute exploratory call with one of our consultants, where they will talk to you about your business's unique circumstances, what's specific to your company, and look at ways that we may be able to help you in terms of your customs health check compliance check. And then we have a stacked option beyond that, where we can do a piece of remote work on sample entries. We can check those from the initial purchase order right through to the invoice and logistics arrangements that have applied to those, the Incoterms related to that, and so on. We'll provide you with a report and recommendations, and also give you a meeting and debrief. Beyond that, we also can get into reviewing your contracts with third parties, reviewing a substantive number of your past entries for different customers or different suppliers. We can look at your quality management systems, if you have one, and your procedures, and make recommendations about how you might build a QMS, because that's a really important aspect if you're applying for authorizations from HMRC. That we expect to see one, and to see that you have written down the processes that you'll apply. And again, we can deliver an improvement remediation plan for that activity. Those three levels, the basic check is free. The basic health check basic is at no cost. Light has a cost of £995, and the complete health check is £3,000 for chamber members. Sorry, for non-chamber members, and £2,500 for chamber members, and applies 2 days of consultancy time. Anything beyond that, we quote on those prices. So that just gives you a picture sort of menu that we have at the moment. But as I say, we will give you the chance to participate with the beta version of our online health check when it launches in the next few weeks.
Great. So I think we just have about 10 minutes to answer some of the questions that have come through.
Yeah, so let's start with an easy one. And again, one that we've been asked many times about MSS reports that exist in Chief. Will CDS offer traders MSS reports, Emmanuel?
Apparently. I think
at some point, maybe.
I don't really want to be quoted on that. That's what we're here. So there is some information already, but as Nicola quite rightly says, is that all of the reporting that seems to be available is linked to money. So if you use PVA, you can see that on a statement. If you use the deferment account, you can see those entries on a deferment account. But MSS is agnostic of money. It's just telling you, the list of commodities, etc. They keep saying, HMRC keeps saying it will be retired, and something will replace it on CDS. That's what we're told, that it will be available through the same government gateway portal on CDS.
They say that, but I think it may be some time off. It would be remiss of me not to mention our Exabler platform that our customers use, which gives them, it's not HMRC's platform, of course, but it shows all of our traders exactly what's been declared on their behalf. It's in their control. They can see what's been submitted. I think often MSS reports are required because traders are typically in the dark about what was actually submitted on their behalf into HMRC, so it's a check and balance. With Exabler, you get to see exactly what's been submitted on your behalf, and also in real time, the approvals from HMRC back.
Well, to add to that, Liam, is that I think it's important to mention that a couple of our customers have actually included Exabler as the system that they use as part of their application for special procedures. Because when you apply for special procedures, you have to prove that you have some sort of management system to handle your movements. And it's very tricky when you have special procedure, but you don't do the declarations yourself and you use an agent like us. So it's really nice to see the HMRC was happy with what they saw on Exabler, because it provides that full audit trail.
It's a absolutely full audit trail. Interesting question here about, I think it relates to what we've just talked about in terms of C88s and what's available through software suppliers to prove exports. Someone's saying that's fine for exports, for goods to Europe, but what about international shipments where you may have sold X works? Well, I'll be honest with you, contributor, I don't really understand the difference between outside of Europe and inside Europe. If you maybe you don't sell X works to Europe, maybe that's the difference for you. But actually, if you've sold X works, then you have to be able to prove that the goods departed your location. Otherwise, you could be liable for 20% VAT. That's why X works can be very problematic, because actually you don't know that from picking the goods up at your location between there and the port that the goods weren't resold to someone in the UK. So the only way you can build that in is through the compliance that you reach out in the supply chain to ensure that the buyer of the goods from you, and I've seen this in firms, in fact, we've helped implement this in firms, where they say to the buyer of the goods buying X works, unless you provide me with the C88 historically or proof of export, then I will send you a bill for 20% VAT. And that's part of the contract that you have to have in place. Yeah. Otherwise, because you're not in control of the the haulier, the freight forwarder, any parties involved in after the goods have left your premises. And so you have to build into your contract something that will ensure that any liability you may face is covered in your contract, because most people don't make 20% margin on the goods that they sell. So it can wipe that out. And hopefully that answers your question with regard to proof of export. Tony Ratcliffe is asking, is there any news on the UK version of the REX system? I think probably see above regarding MSS. A lot of talk about this, but I've heard nothing. Have you heard anything, Emmanuel?
No, and I think there is the REX system is something that we're not implementing. I think the current view is that for our declarations of origin to be valid, we just have to quote like any order number, because we don't have a UK REX system. But I think what they're doing, Liam, is like they're wording that in on a agreement by agreement basis of what is required to support a declaration of origin.
Yeah, I mean, it's interesting. So the REX system got panned early on in Europe, but actually people quite like it now. So as a functioning system. So it's interesting to see that change of heart in a way. Someone's asking, do you think freight forwarders and clearance agents completing import declarations on your behalf are actually calculating the landed cost correctly, e.g. adding the correct costs? How do they calculate if it's FCL or LCL? Well, it's actually up to
It's a
you
good question.
but it is up to the importer of the goods to properly instruct their agents, whether they're freight forwarders or customs agents. And actually, in the audit work that we've done, we can often identify potential for savings in future imports for clients and declaring those factors correctly.
And in addition, is quite rightly anonymous attendee saying FCL or LCL, full container or less than a container load, because that affects not just the apportionment of the freight costs, but it also changes the VAT value adjustment that you apply, which is a vastly misunderstood concept. And it's really, really important that you review how that is done. Try to obtain that information and see what they tell you, and we'll be happy to assist.
In terms of presentation, we're going to email it to you. Not this presentation, but certainly the video. We'll send that out, the recording for sure. So we'll do that for you. Nicola has another question, because Nicola's got a specific kind of issue as a charity in relation to VAT. I'm not sure, Nicola, but I think we've heard from you before on our webinars. I think in relation to this particular issue, so that, for example, with postponed VAT accounting as a charity, Nicola's saying that she can't use postponed VAT. And your declaration has been done by DHL and so on. I genuinely think, as a charity, you need a bit of VAT advice on this, and it's not us that can provide that. We're not VAT experts, but there is a way of, even if you don't collect VAT in your operations, you can reclaim VAT. I think that's the balancing of those two things. Most people that pay out VAT also collect VAT, and if you don't collect VAT, well, you're just paying it out and you can't reclaim it. But there's a way of doing that, and also the HS code for charity, well, you're a charity that deals in medical equipment. So the HS codes for that apply to the equipment don't allow zero rated VAT. I think, Nicola, you need to come and talk to us as a charity, and for us to maybe look at, can we as a company in a charitable way make a contribution through our skill in helping you to do what you're doing? Let's try and make that happening.
Yeah, there are ways, Liam, I can tell you, especially for this very specific case of machinery coming for scientific research. Even if the tariff doesn't say, there are ways that that we can help.
I think we can help you, Nicola, and certainly I would like to try. So please get in touch with us, and separately, and my colleague Heidi will probably have your email address. We'll maybe circle back to you as well and see what we can do for you. I'd be happy to do that. Okay, so I think we'll conclude there. We've answered the questions that were posed by and large. Some we've brought together to make one question. You're welcome, Nicola. Nicola says thank you. We're welcome to do that. We do help where we can for charitable operations and continue to do so, and we'll see what we can do for Nicola's charity. But thank you very much for coming to our event today. We'll be in touch, as I say, with regard to the beta version of the online health check. If you want to participate and use that, you'd be welcome to. And meantime, enjoy the rest of your day and get in touch with Chamber Customs online if we can be of further help to you. We'd love to hear from you. Thank you very much.
Thank you.
Thank you, Emmanuel.